Good morning to everyone. Welcome to our weekly OakBridge update of our markets for today is October 3rd, 2022. Today we're going to talk a little bit about the markets last week, about the Fed, the quarter updates as far as where the asset classes are right now, and then maybe give a little bit of just purview of what may happen in the weeks ahead coming as we look down the barrel a little bit. Let's jump right into our first chart. Our chart for today just talks about the various asset classes that we have. Obviously, these are all equity classes. The fixed income, except for this, the fixed income also got hit quite a bit last week. But just everything was still down for the quarter. And interesting, though, is that small cap actually performed better than any other asset class. Typically, the small caps, the smaller companies, tend to be more volatile. It looks like that they are, at this point, holding up a little bit more resilient than some of the other asset classes. Now, just an FYI for everybody, we did change the portfolios a little bit last week. We've gone a little bit more to a value stance. We've gone a little bit more to a more of a higher end capital type of stance. And so anyway, as we have looked at the markets today, the markets are up a little bit, and we're grateful for that too. But I want to talk a little bit. Most of the volatility that we're seeing right now in the marketplace is primarily driven by two things. Number one is the Fed and the raising of interest rates, and number two is inflation, as the Fed is trying to get inflation under control. And one of the things that I'm noticing as I listen to a number of people visiting about what's going on, not only in the United States but also globally, is that the United States right now, is really holding up better than any other country in the world. England right now, Britain, the Eurozone, Japan, many of the top countries around the world are struggling right now with their banks and with their debt, and are in much worse shape right now than the United States is. And because of that, is forcing the dollar to become a little bit higher. But one of the things that I'm listening to and hearing is that because of the international community, one of the feelings of the international community is that with the Fed being as aggressive as they are in raising interest rates in the United States, that it is impacting those other countries globally, because most of those countries have their goods and services pegged to the dollar. So anytime that the dollar increases, that decreases their ability to export goods and services. It decreases their ability to pay for their debt because they have to pay it at a higher rate. There's just a lot of structural issues with a strong dollar that are exacerbating somewhat the international community right now. And so one of the things that I am watching for is that I have a feeling, I guess, that there is enough carnage going on internationally that my thought is that this last week, I think the Fed may pause a little, well, not pause, just may not be quite as aggressive on their interest rate raising as they have intended in the past. And the market is actually reflecting that a little bit. And one of the things that we watch is just the pricing of fixed income and what the market thinks that the Fed is going to do versus what the Fed is saying that it's going to do. And this week, over this week period of time, you've actually seen global interest rates decrease a little bit, just because they're feeling like the Fed may not have as much room to continue to increase interest rates as they have. So again, more volatility. We're not through this yet. We anticipate that we are getting close, however, to kind of being done with at least some of the worst of this. And again, if you have concerns or questions, please don't hesitate to call us. We're happy to field any questions that you may have. And also, just as an ask from our end, is that if you have friends or coworkers or family that you feel like might benefit from our podcast, feel free to send them out the links. We're happy to share this with them as well. So thank you for today, and we will catch you again next week. Take care.